what are the signs that we can look into it, whether or not September would the Fed rate would decrease or not. Would there be a September Fed rate adjustment? We have been talking about this topic again and again since beginning of the year. So whenever there's like a Fed meeting, we'll talk about it. And then there's a lot of things that we have shared previously on where are we looking at, what are the early signal, early signs, what are the obvious signs that we follow. And then tonight we'll revise it again. All right. One of the big things that being brought up. So gold price have been shooting higher and higher. The obvious reason is gold is being seen as a safe haven assets. All right. So whenever there's market jittery, whenever there's like market downturn or whatever, people will shift their assets to the safe haven asset, which is gold. And right now, gold is hitting like 3.6K if I'm not wrong. And there's like analysts being brought up, the gold price will be possibly reaching 5,000. All right. Yeah, it will be reaching higher and higher. I don't know. One of the things that are being shared by analysts is this lah. So Goldman Sachs analysts say that should investor diversify into gold, they see potential of gold going above 4,000. So right now 306, right? 4,000 means another like close to 10% or in a double digit percentage. If you believe in diversification and you believe in gold, this might be the things that you'll be looking at. Right? Even JP Morgans are looking at 4,250 by the end of 2026. So this is what all the analysts say. And actually, in actual fact, gold is not the only commodities price that went up. So precious metal, like for example, silver is also went up. All right. So this the effect is based on the market emotion and also what the Fed have done. All right, or even our Mr. President have done. So there's a lot of market inconfidence that resulted gold price or gold price went up. One of the actions that done very recently, other than firing away the one of the statistic chief lah, and right now he is firing another head Fed governor. Her name is Lisa Cook, right? So this is another things that he raised up and then he want to fire her lah. All right. So this is the thing Donald Trump do, and then the market not quite happy with it. So one of the persons that are not quite happy with it, which is the CEO. So his name is Ken Griffin. So he said the Trump is playing a very risky game with Fed. And then what's more than that is right now Trump also raised or so called confirmed the candidate of Fed chair after Jerome Powell. So 2026 Jerome Powell stepped down, so he already raised another three candidates: Hassett, Walsh, and Waller. So his involvement in the Fed is a bit too much lah. So that's why market doesn't like it. And then what Ken Griffin have raised is this: preserving credibility is essential because it benefits all American by keeping the cost of borrowing low and then support sustainably grow. All right, and maintain global confidence in US. So once lost, it's costly and take times to build up the confidence. So this is what Ken Griffins have raised, and then he doesn't feel good about Trump actions right here. And another thing is this: other than like gold price, Trump, there's these things that we also need to look at, which is the non-farm payroll, job creation. So last week itself, job creations is less than 30,000. It's like 29,000. All right. So it's the job market have been softened. And what things make even worse is they have adjusted the June number. So June number previously is positive job creation. Right now is negative. In other words, is job shrinking. So this is another sign that market is not doing well because there's no job creation. So the reduction or reduce of job creation increase the unemployment rate. So unemployment rate right now is sitting at 4.3%. 4.3%. All right. So it's quite high. And not forgetting, in order for Fed to reduce the interest rate, inflation rate have to be low or maintained. Right. So now right now the inflation rate is at 2.7%. So the ID rate is 2%. Right now it's 2.7%. All right. So 11 September 911 is one of the important day for this week itself that investors should follow. And hopefully this CPI at least maintain. Yeah. Or even possibly go lower. So if the strip go according to what a reduction of rate should be is like unemployment rate went high a bit, means need job creation, inflation is low, means market is not hit up, and then that's when Fed can consider rate reduction. In actual fact, according to the prediction, right, actually market is looking at reduction for September. 100% prediction is going to reduce. So the matter is just reduce 25 basis point or 50 basis point. So hopefully this will give you some idea on the interest rate reductions in the month of September. Most likely it will reduce. And hopefully by rate reduction, it will not be the worst month for the year itself.